All right, everyone, welcome back. Now we've got Ben Bennett, the founder of patternprofits.net, and we'll be talking about all things earnings related, power earnings gaps, whether you should hold through earnings, and then finally, hopefully, ending with hedging. So really excited for this. Ben's one of my favorite follows on Twitter and my actual first interview on my channel. So it's great to have you back on and get to hear from you again. So yeah, Ben, let's get into it. And we'll just be looking through a ton of charts and talking about concepts. Really looking forward to the presentation.
You got it. It's been a while. We've both come a long way.
For sure.
Yes. So I want to talk about power earnings gaps. What is a power earnings gap? To me, it is a monster double-digit % move on big volume. And I'm usually looking for 300% or more above average volume. Some people like to use a 20-day. Some people like to use the 50-day. You can go either way. The point is it's going to really stand out to you on the chart. You're going to see that big green volume bar. That's what you're looking for. Usually it's a surprise in earnings, a revenue beat. The company has announced a new product or service that maybe they're raising guidance going forward, a debt restructure. Now with social media and that, maybe it's a beat on the daily or monthly users. You know, it's an increase. There's some catalyst there that's causing the big money, the institutions, the banks, the fund managers, they're all tripping each other. They're trying to grab shares. You know, everybody's kind of caught off guard because maybe this is much greater than what the expectation was. So going forward, when you look at those numbers, this is Signet Jewelers. And the catalyst here, they had a 75% earnings per share beat. We also refer to that beat as a surprise. So it's much higher than what was expected as far as earnings go. And then the volume down here, 240% above, I'm sorry, 740% above average volume. The 240%, that was the earnings beat on the quarter growth. This is a monster growth, triple digit number for the quarter. Price itself, 14% gain on that day. So that catalyst is reflected in the price. Sometimes you don't know what the catalyst is, but it's definitely reflected in the price and volume action. So why do we like getting into a power earnings gap? We love getting into a power earnings gap. One, building cushion. You're going to hear me talk a lot about cushion today. So if you have a full 3 months from the time you come into a power earnings gap before your next earnings, you have a lot more time to build that cushion, to have that gain, to be able to hold through the next event. If you think about it, if you bought something 2 weeks before earnings because it looked good or a pattern or a chart, you really only have that 2 weeks to build enough cushion to be able to hold. And we're going to discuss this a lot further. But if you want the maximum time on the cushion, which gives you from one earnings report to the next, this is the way to do it. And you have 3 months, you know, to build that up. Remember, earnings are always a binary event. Binary event meaning it's 50-50. So you always want to keep that in mind. And that's why, you know, cushion is so important and having that into the report. Now, we're going to get into some of the details here. Very specific, and we're going to build on this. So the very basics, the peg day high. So this is your power earnings gap. The peg day high, 74.80. That becomes a very important pivot. The reason that's a very important pivot is because above that peg day high, you know the buyers are being very aggressive if price takes it out. So price through that high, you know they're really coming in and they really want the shares. Because remember, you're already up 14% on day one on the power earnings gap. So if after 14% they come in and they want it even more, and this might be 20 or 30%, and you take that high out, you know that they're super aggressive, they really want shares. The close, also very, very important. The peg day close tells you who's in control. The buyers are in control above that peg day close, the sellers in control below. The other pivot that's really important is the low, that gap low. That peg day low, if it breaks, what's the expectation? The expectation, and you hear it all the time, oh, it's gonna fill the gap. It's gonna gap fill. So those pivots, very important on that day one. And like I said, we'll build on this, but let me take you to another one. Majority of the time, when we talk about power earnings gaps, we're talking about a stock that's breaking out into new highs, but that's not always the case. And for example, DOCU here, in this one, you have a double bottom here. Getting a little off topic for a second, but we always love to see the right side of the double bottom shake out the left. That means weak hands come out. I digress. Let's get back on point. Power earnings gap, big move here. Okay, what was the catalyst here? 57% EPS beat, 267% EPS growth on the quarter. That's huge. Nearly a 20% gain on the day, and volume 584% above average. Big green bars. The next day, remember I told you how important that high was. Took out the high, volume 258% above average volume on day two. How aggressive are those buyers when you take out the high and still get 250% plus volume on day two? Super, super aggressive. You know they're in control. Now, with this, you also had, and you always want to be aware of what's above the power earnings gap, because it can oftentimes act as resistance. So here you had a standard pivot, 236.11 standard pivot. That was the breakout of the double bottom. When you took out that high, boom, off it went. And right here, we're going to get into some details now. You can see I have the glasses on, so we're ready for details. Bullish outside day on the retest. What's a bullish outside day? A bullish outside day, they shook out right here at that pivot. They shook out some of the weak hands as it pulled back. It took out the low of the day before, but look, it recovered. It not only recovered, it went into new highs on the day. That's a bullish outside day, very bullish when it closes way up here. Next day, look at what we got. Big continuation follow through. So you want to be aware, and again, normally we talk about power earnings gaps that are moving into new highs. Be aware of power earnings gaps that take place within a larger, more traditional pattern. Double bottoms, cup with handle, larger consolidations. You know, be aware of those. Because a lot of times you can use that power earnings gap to really tell you how much demand there is for the stock. Then with that traditional pivot, you actually had a chance to come in early before these buyers did. So always keep in mind what's above if you're not breaking out to new highs, although the majority of the time you're moving into new highs. Let's take a look at FLWS. So here, oh, sorry about that, guys. So let's try that again. FLWS. All right. So here, power earnings gap. What was the catalyst here? Big volume you see back here. 122% earnings per share beat, 114% EPS growth on the quarter, plus 20% gain on the day on that gap, and 324% above average volume. Pretty impressive. So what I want you to be aware of, I mentioned those other patterns. Be aware of more non-traditional patterns outside of the cup with handle, double bottom consolidations that you're familiar with. triangles, both symmetrical, ascending triangles. A lot of times they form after these power earnings gaps. What you're looking for here, these consolidations, and I know Leif talked about it earlier, volume dries up, the range starts to tighten. I'm a big fan of inside days. I mentioned before, outside days. As this symmetrical triangle, everything tightens up in here. Boom, comes out, big volume again, above average. You're not going to have this kind of volume here. And then up and off we go. I want to talk about fractals. What fractals means is all of these patterns play out in shorter time frames, which is why I point out the inside days. What's an inside day? Inside day, lower high, higher low than the day before. Buyers and sellers are in balance and having a little battle on an inside day. There's going to be a winner. The winner is going to come out of that either to the upside or the downside. Buyers win, it's going to take out the high and you're going to go to the upside. Another little inside day here. Notice how this little inside day, part of a much bigger consolidation. Symmetrical triangle alone is a battle going on the larger time frame. Shorter time frame, little inside day, when it came out of there, buyers took control. That's what set you up for this bigger move. So always pay attention, to those inside days. That's definitely something you're going to want to focus on. Then let's go to DDS. Dillards. Now you're going to notice too, a lot of these names aren't the typical growth names that we usually trade, and that's just a matter of how the market is right now. The market it's a little choppy, it's values leading, then text leading and handing off back and forth. So some of these names aren't the traditional names that we would think of for power earnings gaps. But here we have Dillard's, 430% earnings per share beat, 192% EPS growth on the quarter. That's comparing the same quarter to last year. So big triple digit EPS growth, EPS beat. 22% gain on the day on 336% average volume. Look at that, day two volume was even bigger than the power earnings gap. Had a little pennant formation here. On that pennant, this is again a little consolidation inside. Notice all of this is inside of this. So think of this as an inside day, inside consolidation, right? Boom, comes out of there. Nice move as it confirms. Now, I want to introduce you to my friend, the 1020 EMA cloud. Sometimes this consolidation is just waiting on this cloud. Goes sideways, you had the big initial move, goes sideways, consolidates. As soon as that 10 MA catches up, there was the move. So you can combine these patterns with the 10 MA. You can use the 10 MA on its own. I prefer the 1020. Some prefer the 8 EMA. If you're trading fast-moving biotechs, maybe you prefer the 4 EMA or the 8. That's up to you and your time frame. But there's a lot of ways to do this. You got to find the one that works for you. Let's go to another one.
And Ben, we actually have a question here from Justin.
Okay.
He says, do you often draw trend lines through the body of the candle? I always use the highs or the lows. I know several of your trend lines go through the wicks of several candles.
Yes, I use the close most often.
Mm-hmm.
So that's why, like this one here, you see that I started it at the close on this day rather than the wicks. But as we started, like if you drew this one down this way and we started to come through, I want the most touches also.
Right.
So I got the most touches by including these wicks. And then here was the, because I'm watching this each day. And if you had this drawn further, if you had this drawn like this, oops, like that, wasn't real impressive, right? So then I'll come in and use these wicks on those two and draw another line and redraw it. A lot of times, and I'll show you this at some point, we'll switch to line chart and I'll show you a little trick that makes it easier. But I like the closes. I always like to use the closes. Let's go over to PPG. All right, so I get this a lot. I can't see the pattern. I don't see the cup with handle. I don't see the triangle. I don't see nowhere to draw my trend lines. All right, so our buddy, Brian Shannon over at Alpha Trends, who did a presentation earlier, he is the VWAP master. I learned it from him, but it's kind of my own interpretation of it. I take a power earnings gap. Here again, PPG had a 20% EPS beat. You can see the numbers, huge, 368% average volume. You see that red candle and you think, and you also see it take out the low here. So, I guess, buyers are in control. Ben said if they take out the low, well, what we do is we add the anchored VWAP here. Now we really get a good vision of who's in control. This anchored volume weighted average price, we call it anchored VWAP, will tell you who's in control. Price above a rising anchored VWAP, buyers are in control. Price below a declining anchored VWAP, sellers are in control. If it's flat and dancing around it, there's a battle going on. You got to wait until you find out buyers or sellers, who won the battle. So what we do, instead of worrying about all those patterns, I've simplified this so much actually that you really could eliminate everything else that I'm using, and you'll see it as we go through them, and just use this. I'm already teaching it to my 9-year-old. He gets it. So it's not complicated. It may seem like it when I share my charts on Twitter and I've got the anchored VWAP and the clouds and the volume shelf. It may all seem like, oh boy, this is a lot. You're throwing a lot at me. But I'm taking each one at a time. I think it will make more sense. And you really could eliminate all that when you have this. So if you really learn how to use the anchored volume weighted average price, you'll be just fine. Let's go over to Skechers. So this one, we're going to, again, get into some details. I won't keep going over all these catalysts because I think we're probably not going to have enough time for it all. But again, power earnings gap is here, right? The expectation, because the low was taken out, is that the gap is going to get filled. That's always the expectation. In this case, it actually was. We got it here. One of the things that I hear most often is, oh, can I take it as soon as it gets above anchored VWAP? No. Right here is exactly why. You have this move intraday above anchored VWAP, but anchored VWAP is still declining. And if the VWAP is declining, you don't want to be that person that gets shaken out on this. So the safest entry, the safest play, let it do all of this. Let it gap fill, let it wiggle underneath anchored VWAP, let it reclaim cloud, which we're getting here. Oh, what do we have there? A little inside day. So we're starting to get a battle here. We had this big move, inside day. Sellers won that battle that day, but look what we got Friday. Big candle, volume not too bad, but you don't really need big volume here. This is more about price. You take out the high over here, you want big volume. That's an important pivot. This is not so much an important pivot. Majority of players, they don't even know anchored VWAP sitting there. So what you want to do, if you wanted an entry on Skechers and you've been waiting on this, wait for it to come back. Turn that anchored VWAP up. Maybe it comes up another day or two, or maybe it just starts coming in sideways. The safe entry is going to be over here somewhere, where anchored VWAP has turned up and price has retested it. You'll love to see a little inside day over here where you know that buyers and sellers are again battling. Test that anchored VWAP, inside day comes out to the upside, boom, you're in, off we go. Let's do another one. AAN. I have to laugh at all these names because it is what it is this quarter. That's what earnings is delivering this quarter and what's having the gaps. But you're so used to seeing the tech names that, all right, anyway. Power earnings gap. Nice numbers, 117% EPS beat, that's the surprise. 313% EPS growth on the quarter. You had a 29% gain on this day with volume 200% above average. A little light on volume, but if you compare it to back here, remember I like 300%, but this one was too good to not share. It covers so many things that we've discussed all in one little chart. So this here, our low, remember how important that is. The low over here gets taken out. Now remember, we're dancing around a declining anchored VWAP here. So there's nothing you really could enter here. This is too risky, it's kind of flat. Maybe you try it. If you did try it, you got stopped out the next day. So coming down here, now think about right here, you took out this low, right? That's a shakeout. That's an important pivot, the low of the power earnings gap. What's the expectation? Gap fill. The expectation is that we're coming down to here, right? So the next day though, instead of getting continuation down, you get an inside day. So that means the buyers and the sellers are back in balance again, right? Next day, you're back above anchored VWAP. This is starting to turn up. Buyers taking back control. For me, when I see an inside day like this that comes out and reclaims anchored VWAP, I can be aggressive with that. This is not the safest entry. It's very aggressive, but I'm okay with this because my stop is going to be that low of the day. So I'm comfortable taking that. The safest entry though is when it turned it back up, came back and retested right here. That's your safest entry. And then off you went. And look at how again, 10 and 20 MA cloud providing support. What do we have here on Friday? Ooh, we got a little inside day cloud support. So you have to pay attention to the details. You really have to zoom into what's going on. But all of this is on a daily chart. I believe anybody can do this. Let's go over to NH. So this has a more traditional, call it cup with handle. This is actually just a cup, no handle yet. Maybe it forms a handle, but you want to be aware of this prior high because it's just above the power earnings gap. Remember I was saying you don't always know what the catalyst is. This was a 34% EPS beat, but I couldn't really find much else. But you did have a 12% gain, over 300% above average volume, big green candle. Always being aware of this over here, because once you did take out this high, if you don't take out this one, which you didn't, the sellers can take back over. And that's exactly what you saw happen. Kind of weak on this day, but sellers took control. Really, none of these do you want to really get too aggressive unless you're a really aggressive swing trader in the first few days. You want to kind of let this establish a pattern. So once you see the pattern here, low gets taken out, gap fill, we got that. This day here, buyers started to step back in, then you went inside day. So you know there's balance here. Inside day, lower high, higher low. When you have balance here, you come out. That doesn't mean you can take an entry here. You have a declining anchored VWAP above. Same thing as it came through here. You can't take this. declining anchored VWAP above. But you know, buyers are starting to get a little bit more aggressive. You can tell by the price action. We flatten the anchored VWAP out, right? Then over here, you get a couple tests as anchored VWAP turns back up, off you go. If you're paying really close attention in here, you'll see here, even though this is red, this is a bullish outside day, meaning you took out the sellers to the downside. You did that again the next day, closed higher, back-to-back bullish outside days. Those buyers were trying to regain control here. And they did. They got back control, and then off it went. So let's go on to the next. Now, oh, real quick, now what you're looking for, maybe this forms another little, you know, cup here, and we have more of like a VCP look to it, or maybe we get that handle. But if you're in from down here and you get that big breakout, the traditional buyers, especially in this market, not a bad idea to sell into it. Take some profits. All right, let's go. This is a recent one. Shared a lot on this. A lot of people were in this one with me. Where do I take profits? Hear it all the time. Where do I take profits? Candles give you clues. Shooting stars when you get extended from either the moving averages, extended from anchored VWAP. Good place to lock some in when you start getting too stretched. Certainly want to lock them in by the end of the day if you see this kind of shooting star action. And at the absolute latest, if you take out if you get shooting star and you still haven't taken any, you take out that low on a candle like this, you wanna lock some profits in. As you come back in and test a rising anchored VWAP, I'm okay with reloading this, especially when you have an inside day here that comes out. You kind of came back and retested, but you had a nice move there. So if you did get in back here, you were trying to take profits up in this area, nice for the swing traders. You had an inside day here that confirmed lower. Even the position traders are probably going to get shaken out here. And that's okay, because if it does set up again, you can always reload. I talk about with my strat friends all the time too, when you're talking about taking profits, price pattern reversals. Sometimes you're just looking at that. We have what's called 2 up and 2 down. That just means it was a day up. It didn't make a new low. It didn't stay inside. It went up. You have reversal patterns, 2-1-2 and the 2-2, a 3. If something goes a bearish outside day, all of those are signals to sell and lock in some profits. You can also use the cloud if it fails as support. Again, 8, 10 MA moving averages, EMAs, whatever you prefer. There's ways that will fit your personality that you can do this. You don't have to, go with exactly the way I do it. Weight Watchers. We're going to introduce, first I want to show you, look at this entry here, confluence. We talk about confluence. You had the power earnings gap high here, 35.04. I mentioned how important that high is. It got taken out. You had a nice run, huge volume down here, both days. Came back, retested anchored VWAP. Anchored VWAP is rising. You can take that. Big bullish outside day. Nice move followed. I want to introduce you to another one of my friends, the volume shelf. If you do take profits when one of these is really extended, a lot of times it's going to come back and retest the volume shelf, the area of most volume. That's right here, that point of control. Came back and retest. Maybe you make the turn here. I would want to see this actually take out the high here before I give it another shot to reload. But something you want to be aware of there is that volume shelf. This is volume by price. This purple line is the point of control. Above that, buyers still in control. Below that, sellers starting to take control. Just be aware of how that lines up with your anchored VWAP. Couple more. AVID, same thing. monster catalysts. This one, you were inside here, kind of tried to come out and break out, didn't work there. But then you had this big bullish outside day off cloud support. Before this big move, the volume shelf was here. So this point of control was actually here. So on this day, confluence, again, you took out the anchored VWAP, you took out the volume shelf point of control, and you had cloud support. Great entry right in there. And that one paid very well if you took it. DDD. Sometimes these happen in downtrends. Big power earnings gap down here, big volume, over 1,000% average volume and up 35% on the day. Shook out lower, cloud actually acted as support as it turned up here. You had an inside day right here. Inside day came out to the upside. Here above anchored VWAP, you can take that. Paid very nicely off a bottom. One more here, Zscaler. This looks a lot like DOCU. A lot like DOCU. Double bottom, shook out on the right. Here's your standard pivot of the double bottom. Here was your power earnings gap. Anchored VWAP showed sellers in control here, but then they took control back. You had an inside day here, tells you consolidation, battle going on. Next day, big bullish outside day. Buyers are stepping in, taking back control. Reclaimed right here, anchored VWAP. And then off we've gone. You got your confirmation of the double bottom pattern, the more traditional double bottom pattern through 199.50. Now you're in good shape because you came in down here. So you can make decisions up here. Do you want to sell partials into this traditional breakout and do what we call, trade around the core, wait for this, maybe you take 50% off, it comes back in, you add some on, maybe you trail a stop, maybe you have a full position, but you're trailing a stop at these lows, but you're in the driver's seat here. You really have the opportunity to make some decisions here and build on your position, depending on your time frame and how you want to handle it. So let's do one more, kind of bringing everything together. Are we doing on time? Yep, we're good. Century mark is always important. Always very important to keep in mind, deliver more levels, 100, 200, 300, even 50 can be a psychological level, but especially the 100, 200. This is Dick's Sporting's. If we're putting it all together now, you're going to kind of bring your volume shelf over. You've got anchored VWAP. You had a little flag pattern here. You went inside, came out, reclaimed anchored VWAP. 100 has been acting as resistance, but we actually cleared that and looks good. It looks good for next week. Couple things, stops. If I took something like this, my stop is going to be below that anchored VWAP volume shelf point of control. I like to do it on a closing basis. So you close in this area below, I'm going to take the exit. Current market too, very choppy. So smaller size on a lot of these helps, especially if you're learning and just getting started with it, taking profits sooner. Also, you get a breakout here next week and this pushes through and you're up, 8, 10, 12%. You might want to take all of it or some of it, again, depending on your time frame, but lock some in. Not the type of market right now to really be pressing. I'm going to show you why. On a bigger picture, why power earnings gaps are so important. If you want to catch a monster, SC had a power earnings gap back here, 2019. Another one here, another one here, another one here. Position traders, these monster stocks tend to have multiple power earnings gap. So if you're going to hold for a bigger gain, let's say you've decided SE checks all the boxes that you look for, growth, new product, the market's healthy, everything's looking good. EPS revenue growth, triple digits across the board. Think about how the general market's acting. If the general market is acting good, if you're going to try to capture this kind of move in a monster, we've talked about this before. Switch over to the weekly chart. Once your cost basis has gotten below the weekly 10 MA, you can switch over to the weekly chart and just try to ride this as long as it will let you. This is something that we try to do with these monsters that have, really strong earnings growth, new product, really trying to capture a monster move, especially if you bought back over here. This is RH now, and you have 200, 300, 400% cushion going in to one of these earnings, and the market still looks healthy. You're going to try to hold for that bigger move. I'm really speaking to position traders now, whereas I was mostly speaking to swing traders earlier. But if you're going to go for that big winner, it usually means holding through 4 to 6 EPS reports over a period of 12 to 18 months. That's kind of the average. And I would also say, don't delete these anchored VWAPs that are from prior power earnings gaps, because a lot of times, like you see right here, they will end up acting as support when the market does come in and correct. So you want to leave those on, kind of like you see I have here, because when the market does come in, a lot of times they're a support level. When we're going in to an earnings event, I'm talking here about big earnings with this, but let's say you're coming into earnings and you only have 10, 12% gain, cushion as we call it. Should you hold or should you sell? This is highly individual, but I'm going to give you a way to approach it, a way to attack it. Check the average move of the last 3 earnings reports. What was the average? If the average was 15, 18, 20%, and you have 10, 12%, you don't have enough cushion to hold. You want to make sure that you're at or above that. Otherwise, there's a good chance on a bad report. Remember, 50-50, binary event. You don't want to give that money back. Plus, I've just given you some opportunities and some ways to get in. So you know now how you can get in if you did take your profits before. Optionslam.com is a good site if you're not sure. A lot of times they have those numbers. You just go in, put in the ticker, it'll tell you what the weekly expectation is of the implied move. From my perspective, the best way, the most accurate way, is to take the at the money straddle, front month, 85% of that. So what you're going to do is take the front month at the money call, add it to the front month at the money put, and multiply it by 0.85. So when you add that, if you get $5 from that equation, and the stock is a $50 stock, the implied move is 10%. You're going to need to have at least 10% cushion, ideally more, but at least 10% cushion in order to be able to hold. The more, the better. Real quick, I know we're coming up on question time, but I want to show you Zillow. This is one that looked good, had 351% average volume, had the big move, was up 18%, 258% EPS growth. But once that high was taken out here, you ended up with that shooting star a couple days later, and it has been nothing but sellers in control since. So this method that I showed you can also keep you out of trouble. When the sellers are in control, price declining below a declining anchored VWAP, from a few days after the power earnings gap, what are we down now? Almost 50%. So it will keep you out of trouble. One more I want to show you, because I just got stopped out of this Risk management, still priority number one. So you have anchored VWAP. If you took it back here, great. You had a nice little run. You had a couple shooting stars. Now looking back on this, these were probably warning signs here. That sell, even though you're above anchored VWAP, it was not acting like you would hope on these breakouts. So then it came in, retested anchored VWAP here. And if I pull my volume shelf over, you'll see you had the volume shelf point of control right there when it tested and reclaimed right here. So you're thinking, oh, if I can take out the high here, turn anchored VWAP back up, we're going to push above the cloud here and off we're going to go. Well, it didn't work out that way. The 10 MA cloud actually acted as resistance. I did take this one, acted as resistance. It rolled over, closed back below anchored VWAP, and I stopped out. But again, you can keep that to a minimum. You can keep it really tight. 3-4% is even a lot with these because you're keeping it really, really tight. I want to talk real quick about hedging. Going back to our SC example, in the old days, and when I say the old days, I'm just referring to back here, 2019, 2020, this was just a beautiful trend. You could hold on to a monster like this and hedge by shorting maybe the SPY, short the QQQs. You could buy inverse ETFs when the market was in correction. So there was a way to hold your biggest, strongest, best performers, leadership quality that you have the most cushion in. You're up 200, 300, 400%. You have the opportunity to hold on to those. And the way I was doing it, holding on to them, hedging. I'm going to watch Uptick in tomorrow for sure, because he sells covered calls and he has a way of hedging that I've tinkered with, but I still don't have it down. Maybe he covers it, maybe not, but it's out there. You can use puts, there are ways that you could go about hedging your positions if you're trying to hold for the longer term. The problem for me, most recently, the big growth stocks that we like to really hold on to for a longer period, they got hit hard, while the major averages, SPY, QQQ, kept ripping to new highs. So if you hedged and tried that technique I just mentioned, and I have it on my blog too at patternprofits.net, how I hedge, you could have got hit like I did on both sides. Your growth stocks got hit 20, 30% at least, some of them even more, and you lost on your hedges because the SPY and Qs kept moving into new highs. So I'm going back, at least until I see some change, to moving to cash. I will not be getting too creative with my hedging anytime soon. I'm going to watch the market a little bit more. I may back test it, I may tinker with it, but yeah, I'm kind of changing that strategy a little bit just because of what the market has presented. Or maybe I watch Uptick in tomorrow and get some better ideas.
All right, Ben, perfect. Is there anything else you wanted to cover before we go over to Q&A?
No, I think we're good. I think, yeah, I think we'll go over to Q&A.
Perfect. And I'll definitely ask Jim Ropel tomorrow about hedging for sure. That'll definitely come up. But
Yeah,
anyway, we've got some.
I know the basics. He sells covered
Right.
calls and he uses the 50-day moving average. But yeah, I need more details because my way, obviously, over the last two corrections, that's not going to work.
For sure. We've got some great questions from people in the chat. So first of all, I'm going to take the first one actually from myself. Do you consider how far the stock has come in its move when looking at a power earnings gap? Because you basically, because you might treat the first one differently than, for instance, the fourth, fifth one out of a later stage base.
So I don't. And the reason I don't, I mean, I will consider how late in the overall run is it, but many times to me, that power earnings gap is happening because new information is coming
Right.
at the same time to everybody, and they're caught off guard. You know, there's something changed in the story. So I'm more in tune to what's the price action doing, who's in control at what point,
Right.
more so than how far, you know, we've come. Or, I mean, it's there, it's in the back of my mind. As a position trader, it's going to affect me a lot more than as a swing trader. Like, I'm
Right.
probably not going to go for the 300, 400% hold for 12 to 18 month, you know,
Right.
type move. I'll look more for the swing.
Gotcha. And some people are asking about basically buying on the day of the power earnings gap. Is that something you do, or are you waiting for that test of the anchor VWAP and the setups you talked about?
Yeah, I used to try to zoom in to the shorter time frames and find support and resist. I don't do that anymore. It's so much easier for me to let, you know how we talked about in our first interview.
Yeah.
I avoid the breakouts like the plague, the traditional can slim through pivot,
Right.
cup with handle breakouts. I avoid the drama.
Mhm.
Same thing with the power earnings gaps. There's so much drama on that first day. And if you zoom in, you know, I was listening to the guys earlier, you zoom into the 5-minute chart,
It's going up and
good
down.
for
up
you.
and
But
down.
for me,
Yeah.
too much drama, too much shaking out, you know, too much of that going on day one.
Right.
So let it settle down. Let's kind of evaluate the price action. It's a lot easier to evaluate the price action 3 to 5 days after than, you know, on day one.
Makes sense. And we've got a question here from Donnie. He says, can you ask about short interest with power earnings gaps? I think Trader Stewie uses short interest when he considers them.
Oh, I always take a look. The more the better in my turn, especially when that makes that turn.
Mhm.
When like Big Five, I think was one especially. You have like 20% short interest and 5 or 6 days to cover, when right here and right here, when the shorts weren't able to take control. I knew this move was, well, I shouldn't say I knew, you never know, but I felt like, yeah, there's a short squeeze coming. I don't
Right.
have it drawn in here, but this is a little triangle. When you came out of that triangle, it was like, oh yeah, we're gonna go. And this one, I think it was close to 20% short interest, 7 or 8 days to cover. Yeah, that's great when you stay above anchored VWAP and it starts making some progress. You always want to be aware of that.
Perfect.
Short
And there's
interest definitely important.
for sure. And there's a discussion about this, some questions about this, and it might depend whether you're in a swing trading mindset versus position trading. But do you average into your position as Pat Walker? You just talked about doing 50%, then 30%, then 20%. What's kind of your style?
So I don't average in as much because my stop is so tight. My largest entry is right there where the stop is super tight. I'm more with Brian Shannon. You know, Brian he comes in larger earlier, and then tries to sell in pieces, ladder out on that move, you know, up into strength. I'm more along the lines of that. But if you come back and retest, if I still had this, came back and retest gently, not this big type of candle on this kind of volume, but if you flagged out here and came in gently, and then come out of an inside day, maybe I have flag support there, maybe I have the volume shelf, I'll definitely will build on that position, always on the way up, never on the way down.
Perfect. And some people are asking in the comments, why use the anchored VWAP versus the moving averages, for instance?
I use both, but again, this is an individual, that's why I showed in the beginning.
Yeah.
It's highly individual. You don't have to use anchored VWAP, but I'll tell you, my son has a rough time viewing the patterns and the moving averages. If I take all that off, or if I can give a new trader, I can take all of this stuff off with a new trader and just have this, and they can trade that. When I combine as many tools as I have, as much lines up, like we talked about earlier. I want confluence. The more things I have pointing at one spot, the more conviction I have in that trade, the more liquid it is, probably the larger size I'm going to come in with. So, and that could be anywhere from 6% to 20% as a starter. So yeah, the more things that line up, but anybody can trade this. This is your support level as you come in, is trending up, price above it. Okay, you anticipate that's going to be support. And if it's below it and it's declining, it's resistance. Sellers in control versus buyers in control. Gotcha.
And what are some significant events, days where you'll actually place an anchored VWAP? What are some kind of like type of significant levels or days that you would want to anchor from that point?
This is WWE. This wasn't a power earnings gap. This was news. This was Reddit guys coming in, and it has huge short interest. Same thing. We don't really change the approach, even though it's not a traditional power earnings gap. All the same tools, but this volume is what gets your attention. This volume, this kind of price move gets your attention. Lucky me, I happen to be in from a little lower. We talked about it, shared it on Finchwood. I actually came into this before, and that was a pinch setup, a completely different setup from what we're talking about. But this right here, this kind of move, when you get this kind of volume, this kind of price action, that's going to get my attention, especially on a big liquid name like WWE. It's been around a while. There's good volume in there. What do we do? Like almost 8 million shares, I think, this day. Something like so. Yeah, that's one that I'm watching now.
Gotcha.
Since I'm in from down here, I can wait and let this kind of play out a little. I did take off half, and I shared that on Finchwood. I took half off into this move in the morning, but I still have half on, and see how it plays out.
And did you take off half because of that poor close? It's kind of closing well off the highs there.
I had already taken off half early as it started to come back in. Yeah, it was well off the highs, started to come back in. And this was just a huge move for this stock. And I'm still in the back of my mind, I'm always in that traditional canceling 20% to 25% take off profits. That's what I was in, that range here. I think I caught just over 20% on that one. So I went ahead and locked that in, especially in this market. But I'll give it time. Maybe we wait for the 10 MA, 20 MA cloud here to catch up, goes sideways a little bit, reclaims, and we'll see. But having that cushion is what allows me to kind of wait on it and see how it plays out.
Right. I've got a question here. What about your exit and profit target strategies, profit target areas?
Yeah, 20 to 25% is usually where I'm always going to try to lock at least a portion in. Right now, swing trading, a little different. I'm locking in more. Give me 10%, 12% rather quickly. I'm locking that in and keeping my stop at about 3%. So I'm still in the right risk reward ratio. It's just that the current market, like I mentioned earlier, is so choppy. Again, you're seeing that here. There's not a lot of continuation, at least not easy continuation like we saw. So, I'm definitely trying to lock in at least a portion a little earlier than usual, rather than where in last year I'd be holding out for 20, 25 or more.
Right.
Not the best market to take that approach.
Perfect. And we've got a question here. They say it's interesting. Most of the anchor VWAPs you drew are from the top and never from the bottom of the previous space. to find support. So I guess it's another question about where you like to anchor your
All right.
levels.
So anchored VWAP, when you anchor this, it tells you. So I'm not anchored VWAP down here. I'm just anchoring it to day one. I hear that.
I think they meant from the bottom of like the prior swing low or something like that.
Oh, I do that also. That's just different from what we're sharing here.
Right.
Oh, absolutely. Yeah. I mean, this is a spot right here that, or even the breakout, but definitely, yeah, I'm aware of it.
Okay.
Yes. We come down and test that from the swing low. Yep. I'm going to pay attention. This, this was kind of your breakout day. Actually, this one had the bigger volume breakout of the downtrend. You know, they're not too far from each other, but oh yeah, I'm always aware of that, you know, on the pullback. That's what sets up the pinch. And I know Brian Shannon covered all this earlier, but yeah, the anchored VWAP from the lows, then the anchored VWAP from off the high sets up that pinch, that consolidation that forms in here. If that pinch forms and it breaks to the downside, I'll definitely be all 100% out. But I'll let this pinch kind of play out here, see if it breaks out to the upside for trying to capture more gains.
Perfect. And this isn't entirely related to power earnings gaps, but we've got a question here. How many positions do you usually hold?
My comfort zone is 6 to 8. That's where I'm most comfortable. I'm not on margin right now. I've been staying away from that because of the market. I usually try to be in that 6 to 8 range. Power trend, if we get into that, where the NASDAQ is trending above, I won't go into details, but the NASDAQ is trending above the 21 EMA, I'll start pressing the margin. If my portfolio is acting well, if I'm making, which I'm making progress, but it's not 2020 progress, but it's progress. But I start seeing, wow, now I'm really starting to make progress in the portfolio. I'll push that. And sometimes when things are really acting well, I'll keep taking partials, but like, oh, I want to ride a little. Next thing I know, I have 12 positions. You know, it does happen. But when that happens, they're all green, you know? So I know that the market's working, the market's healthy, my process is working, and I'm pressing.
Right. And what are your thoughts on kind of the psychology of power earnings gaps? Because to the very new trader, buying something that's already up 20% over the past month or so because of this huge gap, they might feel a bit scared buying into that because they think it's just going to get filled all the time.
You have to get past that. And the best way to do that is just to see it play out over and over and over.
Right.
You know, when you see this 27% gain, you're scared. Oh, but you know, it had some support. It had a consolidation here. Then it gapped up. If you're scared of that, you miss all of this.
Right.
And if you study these enough, you'll see this enough. You don't have to catch too many of these over a short period of time to really make progress. And if you can match that up with like DOCU and ZS and some of these that are real leaders, like this is something I have a lighter volume, it's something I trade, I'd swing, I'll take a position and let it ride, you know, small position. But those big ones like DOCU and ZS in particular, that are leaders, it's a new product, we're familiar with it, big institutional support behind those names. Those are the ones that you can really get behind with conviction and ride those. When something has that much float and it's going into new highs, or it's making that, you know, progress and trend day after day after day, new high, new high, new high, the market's telling you that they're, you know, fighting over each other to get shares. Those are the ones you really want to grab onto and hold for the big win.
Perfect. I think that's a great place to end it. Ben, thank you so much for sharing your expertise and coming on. We really appreciate you speaking at our first conference. We really appreciate it. And yeah, thanks everybody for tuning in. We'll take another quick 15-minute break and then come back and end strong with Ross Haber on risk management and position sizing. Probably the most important thing. Everybody likes to to talk about entries and all of that, but risk management, that's how you stay in the game over the long term, along with all the other key components. So with that, thanks so much, Ben, once again, and we'll take a quick break.
Thanks, Richard.
Yep.